going on, YouTube traders, investors? Today is an update video on the S&P 500, probably the best gauge of the market. And hopefully we have found the bottom. Let's get into it. All right, here we are in the Thinkorswim platform presented by TD Ameritrade. And if you would like to use this charting platform, all you have to do is open up a TD Ameritrade account. You do not have to fund it. Once you've completed that process, you'll be able to download this software onto your PC. And they also have versions for Apple and Android for your cell phone. So awesome platform. If you like using it, just open up that account and you could chart away. So on to the 1 year chart of the S&P 500 or the symbol SPX. As you can see right here, I've been trying to call a bottom on this. Hasn't been the best thing to do. I mean, it's hard anyway, but I'm going to do a rundown through this. The first possible bottom was right here. This was the breakout onto that high of 3,393. It was the breakout right here. So a lot of people thought this would be a logical place for it to bounce and come back, but wasn't the case. This crisis is way more than we ever thought it would be. And I believe it is going to get worse before it gets better. But on to the next bottom. I thought this was a logical place to bottom because we had bottomed there before, tested it, bounced. It was support and resistance before. So I was like, hey, this is the next logical bottom. Was not the case. This bottom right here was like, I was like pulling straws. Okay, we did come down and bounce there. So I was like, hey, if that one, then it's got to be this one. And I was wrong. For the next one, we're going to go ahead and switch to a different, well, actually not a different chart. We're going to go on 2 years so I can show you why I picked the bottom on the next one. We'll bump this to 2 years. Okay. The next bottom, which is down here, was the bottom from December 2018, where we just free fall all the way down. I was like, hey, this has got to be it, right? It can't go further than that. I was wrong. And here it leads us to where we are right now, which is the 2191 bottom. And from here, let me go ahead and switch this to this little device. From here, we dropped about, I want to say 6%. I looked at it the other day. Yeah, roughly 6%. We went 6% lower than the low in December of 2018. So hopefully this is the bottom. Hopefully it is up from here. We'll zoom in a little bit. Today was a red day. If you look over here, we were down 88 points or about a little over 3%. The Dow was down 4%, but everything was 3 to 4%. The VIX was up 7%, which this is crazy right here. The VIX still over 60. Still over 60. It's crazy. And it just shows you that we are in store for a lot more volatility. A lot more volatility. And that's all I can say about that. As we go further into this crisis and we see every day, we're going to be able to know a little bit more about this virus. And the more we know, the better we'll be able to defend against it. But the best thing that we can do now is stay home. Stay home unless you absolutely need to leave your house, because we need to flatten that curve. We need to make it to where the hospitals do not get overrun. If we can do that, we're going to make it through this with flying colors. If we don't do that, and we still have people out there going in groups, going to the beach, going everywhere, like, stay home, people. That's enough of my rant, though. But as you can see, we got a nice bounce. We got a nice bounce coming. I think the next time we're going to get rejected is around 2,700, right in here, which was that other possible bottom. I think we're gonna see some pretty major resistance. We're gonna come back, but I believe this recovery is gonna take longer. I mean, we have a lot of money being pumped in to help a lot of people, to help the market. So as long as we don't go over a month of this lockdown, if we go over a month, all bets are off. I mean, we're gonna retest that low and maybe go lower than that if we do this for more than a month. Right now, it's kind of a balancing act on trying to contain the virus and not destroy our economy. So all of this is minute by minute. Hopefully we can flatten the curve. And if you don't understand that, whenever you have growth of a virus and it starts to grow exponentially, we need to be able to flatten that curve. If I could show, I'll probably throw up a graphic showing this, but so where we don't peak and overrun our hospitals. If we can flatten that curve, make the virus spread more out so it doesn't all hit us at one time, then we should see a quicker recovery. We can't do that, then we might see a hockey stick. We might go down and see a hockey stick. But the low is in, I believe, at 21.91, which was 6% lower than the low in December of 2018. But everything is fluid, minute to minute, and that's about all I have. So you can see that we bounced back from that low today. So we're up about 15, almost 16%. That's a good bounce. We needed to pull back today. We needed a little breather. So hopefully we can continue moving up next week. But that's all going to be dependent on the news. If anything gets worse or we get really, really bad news, we could definitely be headed back to retest that low. And with that, it's going to conclude this video. If you like the content, subscribe. Also, like the video. It really, really helps. It helps get my information out to more people. So with that being said, I'll see you in the next video. Thanks for watching.